So everyone's talking about Bitcoin right now. The market is just buzzing. But here's the thing. The signals, they're telling two completely different stories. Are we looking at a huge breakout, or is this just a classic fake out? We're going to dig into the data and see what's really going on.
I mean, the feeling in the market right now is just electric. You hear it everywhere from analysts, right? Phrases exactly like this one, Bitcoin is breaking out again. It really captures that super high momentum, that really bullish vibe that's surrounding Bitcoin at this exact moment.
And this is the number that's on everybody's lips, $120,000. That's the short-term target that a lot of analysts are pointing to. I mean, it's a massive move for sure, but, and this is a big but, it's not a done deal.
Okay, so getting to that big number really hangs on two critical things. First up, Bitcoin has got to hold its support level, which is right around $112,000. And second, that momentum we're seeing in the derivatives market, where traders are making bets on future prices, that has to stay strong. If both of those things happen, well, the path forward looks pretty clear.
All right, let's get into the good stuff. What's actually fueling this bullish fire? Let's look at the data. Yeah, this is the big question, isn't it? What are the traders and analysts actually seeing that's making them so sure about this whole upward trend?
Well, it really boils down to a few key indicators that are all pointing in the exact same direction. So let's decode these signals together.
Okay, this table lays out the bullish case perfectly. First, look at the moving averages. The price is trading above both the 50-day and the 200-day. That's a classic textbook sign of a really strong, healthy uptrend. Then you've got the RSI, the Relative Strength Index, sitting around 64, 65. What that tells us is there's some serious buying momentum, but, and this is key, it's not in that overbought zone yet, which could signal a reversal. On top of that, we're seeing rising open interest in derivatives. More traders are jumping in, betting the price will go up. And to top it all off, the Fear and Greed Index, it's sitting squarely in the greed zone, which pretty much confirms that the overall market vibe is super positive.
So yeah, everything looks incredibly positive, right? But you know how it is in the markets. Whenever everyone is looking in one direction, it's probably a good time to ask, is there a catch? And it turns out there's a really interesting counter signal bubbling up just under the surface.
And here it is. This is the catch. While all those short-term indicators are practically screaming, buy, 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 there's a really important group of investors, the long-term holders, the ones people often call the smart money. Well, they're actually starting to sell.
And look, we are not talking about a small chunk of change here. On-chain data, that's the data pulled right from the blockchain itself, it shows that in just the last 30 days, these veteran holders have sold off something like 400,000 Bitcoin. That is a ton of supply hitting the market all at once.
So this is where things get really interesting. This is the central conflict in the story right now. Are we just seeing smart investors taking a little profit off the table, which is totally normal in a healthy bull run, or is this the canary in the coal mine, the early warning sign of a major reversal?
And you guessed it, analysts are totally split on what this means. On one side, you have analyst Barak Kismechi, who's sounding the alarm. He says this selling is injecting real bearish pressure into the market. But then, on the other side, analyst Darkfrost is way more chill about it. He points out that this 2.2% drop is just a modest reduction, especially when you compare it to the 5% plus sell-offs we've seen in past cycles. So you've got two experts looking at the very same data and coming to two completely different conclusions. Wild, right?
Okay, so the short-term picture is, well, it's pretty conflicted, to say the least. So let's zoom out for a second. Let's look at the bigger picture. What are the major forces at play that could really shape where Bitcoin goes over the next year or so?
When you look long-term, it really depends heavily on these big-picture economic factors. You've got to keep a close eye on inflation data. If inflation keeps cooling down, it makes it way more likely the Fed will cut interest rates, and that's usually great news for assets like Bitcoin. And of course, you can't forget about political risks, things like a potential US government shutdown or big shifts in global liquidity. All of that can either push investors toward Bitcoin or scare them away.
So what does all this boil down to for the price over the next, say, 12 to 18 months? Well, analysts have kind of mapped out a few different ways this could go. Your base case scenario, let's say the Fed cuts rates and big institutions keep buying in, that puts Bitcoin somewhere between 150 and 180 grand. Then you have the super optimistic bull case. If things like ETF inflows really take off, we could see a massive move up to the $200,000, maybe even $250,000 range. But there's always a but, right? There's the risk case. If inflation suddenly spikes or regulators get tough, we could easily see a pullback to the $75,000 to $90,000 level.
So here we are at this absolutely fascinating crossroads. On one side, you've got this powerful, data-driven signal for a massive short-term breakout, but it's running headfirst into a serious warning from the market's most experienced players. It's the classic battle, right? Momentum versus the so-called smart money. The only question left is, which story is the market going to tell next?